Donald Trump just proposed a 50-year mortgage, and I'm going to explain what this means in the simplest way possible. First, let's talk about what a mortgage is for those who don't know. A mortgage is basically a big loan you could use to buy a house. You put some money down, and then the bank pays the rest, and then you pay the bank back every month, plus interest, over a long period of time. Most people choose a 30-year mortgage, which just means that you take 30 years to fully pay off the loan until the house is officially yours. Which just means you take 30 years to fully pay off the loan until the house is officially yours. A 50-year mortgage is the exact same thing, but stretched out to 50 years instead of 30. Two things happen when you stretch the loan that long. One, your monthly payments go down, and two, you pay a lot more interest overall. It means you're paying less today, but staying in debt for way longer, and a lot more debt. Here's a clean example. I'm gonna compare a $500,000 home with a 30-year mortgage and a 50-year mortgage. Let's start with the 30-year mortgage. So, a $500,000 home, the average down payment, 20%, which means it's gonna be $100,000 down. At a 7% interest rate, which is the current average, your monthly payments would be about $2,700 over 30 years. The total interest you'd be paying over that 30 years would be over $560,000. And remember, this was a $500,000 home. So in the 30 years, you're paying over twice the amount of the house's actual price to eventually own the home. Now, the numbers are even crazier with a 50-year loan because same thing, 20% down, $100,000. There's a remaining $400,000 that's loaned out to you. The monthly payment, instead of around $2,700, would now be $2,400. So that's a lot better. But the interest you pay over those 50 years is over $1 million. Housing is insanely unaffordable right now. Prices are high, interest rates are high, and most people can't even qualify for the monthly payments. A 50-year mortgage would lower the monthly costs so then more people could get into homes. Bottom line is, a 50-year mortgage is basically a trade-off. You get lower monthly payments, which helps people qualify, helps investors with cash flow, and makes expensive homes more reachable. But you stay in debt way longer and you give the bank way more money over time. It doesn't magically fix the housing crisis, it just shifts the cost from your monthly payment to your long-term financial future. So whether it's good or bad really depends on you, your goals, your income, and how long you plan on keeping the property. I personally think a 50-year loan is not the move, especially with interest rates these high, but if you could lock in a mortgage that long for maybe like under 3%, then it might be worth it. Thanks for watching. I'll see you on the next video. Subscribe if you want to learn how to grow a stock portfolio just like this, and how I bought a $50,000 BMW when I was 17 and afford a $5,000 a month New York City apartment with crazy views. I'll show you exactly how I made tens of thousands of dollars on the stock market before I turned 20. Watch me get rich or get rich with me.